If you're invested in the stock market, April would be a month where you see your entire portfolio taking a dip. Even though I may seem like a personal finance guru to you guys, I still have a lot to learn when it comes to investing, and it's my first time experiencing something like this. Anyway, after reflecting, here are some lessons I've learned and how I'm planning to invest my monies from here on. I hope you take away something today. Without further ado, let's dive straight into today's video. Let's go. Before we get into it, you gotta know what kind of investor I am. I'm not somebody who's confident in stock picking after trying it out for a period of time. I did cover in this video over here. I honestly do not like how actively I have to monitor the stock market, let alone one particular company. Instead, I prefer consistently dollar cost averaging into something like the S&P 500 index fund, where it tracks the performance of the top 500 companies in the US for the long term. And I mean at least 20 to 30 years. But more than that, I'm also invested into the Singapore stock market to diversify, because as you know, that saying goes, do not put all your eggs into one basket. So the first lesson I learned after reflecting on what happened in April is to define my baseline. What do I mean by this? I have a little over $100,000 sitting around, but I've not defined a specific number to keep, or rather what's commonly known as emergency funds. And because of that, I wasn't able to deploy as much as I thought I would. Generally, for anyone who is employed, having about 3 to 6 months of your income or living expenses stashed in a high-yield savings account is your emergency fund to sustain yourself should anything happen, like losing your job or there's a medical emergency that you need to use your cash for. But for someone like me who is self-employed, where my income isn't consistent monthly, I'm going to be very honest, I am insecure about this. Not knowing for certain how much I'd be making in the coming months besides maybe the $1,000 coming from Google AdSense revenue, so long as I consistently upload one video a week. Like for the month of June, I'm only expecting my income to be somewhere around $3,000. So after some homework, I've defined my baseline to be about $40,000. How did I derive this amount? Seeing how my expenses was like for the past few months, I'm going to set my monthly expense to be $3,000, including fixed expenses as well. I'm going to set aside for 6 months, and that's a total of $18,000. I pay about $6,000 a year for insurance, and I want to have enough to pay for the next 2 years should anything happen. So that's another $12,000. Giving up on health insurance is a no-no for me. Seeing how my health is progressing, I honestly do not want my plans to lapse just because I can't pay my premiums. It's the last thing I want to happen. I want to be insured so that if anything happens, the insurance company will pay for me and nothing much have to come out from my own pocket. Another $10,000 I'm allocating is just to add a little bit of a buffer, or me just being a typical Singaporean. Knowing a specific amount like $40,000 over here, when the market dips, I don't have to come into my finance tracker to analyze my entire financial situation all over again just to figure out how much I can deploy into the stock market. Please note that personal finance, as the name suggests, is personal and your circumstances is different from mine. 3 to 6 months emergency fund is the general rule of thumb, but for someone who has other commitments and responsibilities, this could vary. The amount of $40,000 here is enough for me to feel safe to keep myself invested into the stock market, and I don't have to resort to liquidating my positions just to sustain myself if anything happens. So this is lesson number 1. Let's move on to lesson number 2. More than just defining my baseline, which is my emergency funds, now I know I have $60,000 liquid to deploy to the stock market should something like April happen again. What I've realized when looking back is that I didn't know each time how much I should be buying. Later on, I'll show you my transactions and in total how much I've invested. It was random amounts. I just decided, okay, I'm gonna deploy $3,000 and I did. But instead, I want to be systematic about it. Knowing that I have $60,000 liquid to deploy, I'm going to do it in 3 tranches. So the next time something like April happen, each time I buy, it's $5,000 and I know I have 12 times to buy into the stock market. Instead of just buying one lump sum, I want to average in and stagger the times that I buy as well. So this is lesson number 2, is to have a deployment plan, because I just don't want to have to think about, okay, how much should I be buying each time? After defining your baseline, if you're someone who's just starting out and like me wants a hands-off approach when it comes to investing, use a regular savings plan to ensure you stay consistent with your investments without you having to lift a finger every single month. A regular savings plan basically automates your investments based on regular intervals instead of investing lump sum. Be it whether is it daily, weekly, or monthly, automate it. During market dips, we buy, lowering our average cost, and even when the market trends upwards, we buy so we can capture more of the upside. Moomoo Singapore allows us to set this up with as little as $5 and fees from as low as 99 cents per order. If you had just invested $5 monthly from 2022 to 2025, your portfolio would be up. But of course, past performance is not an indication of future performance, but you get the gist. Everything can be set up on Moomoo Singapore's app. It automatically deducts from your bank account, exchanges currencies, and buys into the stock or ETF of your choice on the date that you've set, making it seamless and fuss-free. If you need a step-by-step guide on how to set up a regular savings plan, refer to this video I'll link up above and down in the description box below. As a new user to Moomoo Singapore, right now when you sign up using my link below, you'll be receiving a total of $820 along with 1 year commission-free trades in the Singapore stock market, making them one of the cheaper brokers to go with. For more details on how to get the full amount, I've broken it down in the description box below. And the last lesson was to know exactly what I wanted to be investing in. Remember earlier at the start of the video, I mentioned to you guys that I tried out individual stock picking, but did not fancy it because I have to actively monitor the stock market. I still hold 2 individual companies in my portfolio, and I was really tempted to buy more just to lower my average cost, but I hesitated and I did not eventually do it. On the contrary, for something like the S&P 500, where I know for certain I'll be dollar cost averaging monthly, investing in it for the next 20 to 30 years, I did not hesitate to invest into it, and I put in a little over $6,000 USD. But my point here is, knowing for certain that I'm investing into the S&P 500 for the long term, I could just take out money, transfer it to my brokerage account, and invest into it without any hesitation. But for something that I wasn't certain, I hesitated, and by now the market opportunity is over. Even though in the future it will come again because market fluctuates, it goes up, it goes down, it doesn't go up all the way. So this is the 3 lessons I've learned. Number 1 is to define my baseline with a specific number. Number 2 is to also have a deployment plan. Even if you can't do one-off purchases, know how much you're investing into something that you believe in consistently every single month. And lastly, like I mentioned, it links to number 2 as well. Know exactly what you want to be investing in. But all that being said, it's fine if I do not buy the dip, so long as I do not panic looking at the stock market during times like this and sell off my investments thinking I should salvage what's left. If I'm investing for the long term, it will never be a constant uptrend like I mentioned earlier. Market will always fluctuate, and there are years where the S&P 500 returns negative as well. But I just have to stick to dollar cost averaging monthly for the long term and let compounding do its magic. And this is where a regular savings plan can help you guys as well. I hope my insights and my lessons from what I've learned helps you in one way or another. And if you have any questions, as always, leave it down in the comment section below or direct message me on Instagram. If you guys do not know, I do have a Telegram channel of my own right now. Scan this to join, and I'll catch you guys in my next video. As always, have a great week ahead, and I'll see you guys in my next one. Bye-bye.